Hi everyone, this is Eric from Traders Helping Traders with this week's Tricks of the Trade. Well, this week we're not going to talk so much about a trick as a reality in trading. One of the most difficult things in trading, if not the most difficult thing in trading, is learning to trust your signals. And unfortunately, there is no shortcut to this, and unfortunately, it is something that is likely to plague you for the duration of your trading career. I've been trading for many, many years, and it is still something that I struggle with on occasion. Here's a perfect example. This is sugar that I saw setting up last week. Now, those of you who were following the nightly updates know that I did not make a sugar recommendation last week, and this is why. We have sugar in a downtrend. It's been in a downtrend pretty much since it looks like it peaked at the end of August, and then it fell below our moving average lines, and it's been in a downtrend ever since. Now, sugar is a very volatile market, or potentially a volatile market. It can make some rather large moves rather quickly. And you can see that since around the latter part of October until present, sugar prices have been consolidating. They've been winding tighter and tighter and tighter. And you can see I've actually outlined this as a triangle formation. Now, I don't usually trade the formations per se, but it does help you see what the market is doing. Last week, we saw sugar give us resistance here last Friday and last Monday. So Friday from the week before and last Monday gave us our green-red combination, which gives us resistance. You'll see that it also coincided very closely with the trend line on the upper range of the triangle. And our moving average lines, let's take a quick look at what our moving average lines are doing. Our 5-period moving average is sloping up, and it looks like it's going to cross back above the 20. So it looks as though this market might be forming a reversal position. You can see that if we were to short from here, traditionally, we would have to take into account the support or potential support offered by this lower trend line, also the lower edge of the triangle. So in that case, it kind of brings this old support around the 1125 area into play, and you can see that's a substantial area. We have quite a few hits in this region, and two of them at least are reactionary. We had the market bounce here, and we also had it bounce here just a couple of weeks ago. So it's definitely an area that requires our consideration. But, and this is the tricky part, take a look at what's happening to our MACD. Remember, we use MACD to help signal momentum changes, and that's exactly what we have here. Look, it is very, very subtle, but do you see how MACD has all of a sudden headed lower when the market formed resistance? That is typically a sell signal for us. So what I should have done is I should have disregarded this triangle, and I should have sold the resistance that was formed when the market made this green-red combination. So I should have sold this range here, essentially last Monday's range, based on the resistance and the shift in momentum. But I didn't. I let that triangle, that you see right here, I let that triangle cloud my judgment because it scared me to enter this close to the trend line, knowing full well that the market has the potential to bounce off of the trend line again. But I had my resistance, I had my shift in momentum. What I should have done is trust my signals and go with the trade to the short side. And if you were watching sugar at all last week, you can see that it would have been a very profitable trade as sugar made a big move to the downside. And as of last week's close, I could have been up $1,000 per contract. So that was a very expensive mistake. But as I mentioned at the beginning, learning to trust your signals is going to be the hardest obstacle for you to overcome as a trader. So what can you do about it? Well, I have a couple suggestions for you. First off, paper trade your brains out. Trade, trade, trade. Learn to trust your signals. And secondly, go in with real money and start small. Start in a rather benign market, or a market that's not too expensive. Canola is a great market to start in. You can probably get into most contracts with only a couple, maybe $300 risk exposure. Mini corn, mini wheat, also very good ones to start in. But try to get your feet wet trading real money, small contracts, and that will help boost your confidence. Don't be afraid to take profit when you have it. That too will help you learn to trust your signals. And that's this week's Tricks of the Trade.